Welcome back to Morning Trade Live. Our focus, the big picture ahead of the opening bell as markets are selling off. Oil is escalating. We're off the dramatic moves of the day, but still noting, look, you're seeing the VIX above 20 for the first time since early June. Joy Yang, head of Index Product Management, Market Vector Indexes, is with me. And I'm glad you're with me because you had Israel strikes on Iran retaliation with drones. And this is not over, at all, and has caused obviously some ripples throughout this market. What do you make of it? What are the market impacts of something like this?
Yeah, as you mentioned, it's not over, it's just beginning, but it's a wake-up call for investors to realize there's not just macro tariff risks here, there's lots of other risks out there, and people have been so focused on this trade war and negotiations, but that's going to take a long time to play out also. So this is kind of the new normal. We're going to have geopolitical tensions escalating at any point in time. We're going to have this ongoing trade wars, which is not, we haven't gotten any clarity, although the negotiation talks have completed yesterday, but I don't see us anywhere near understanding what the new price and tariffs will be. And of course, we're seeing this breakdown between the traditional equity and bond relationships.
When we see what's going on with the S&P today, people got very comfortable back above 6,000. They see it selling off. Right now, the S&P is the futures is 59 and change. So the point is that they have to be ready for some uncertainty, some volatility. No one actually, 59.83, no one expects the market to stay at a certain level. But what's the advice to folks to be diversified or to have some protection on the downside? But, also people want to make money. What's your outlook and some of the advice? I know you have ETFs that you're going to be talking to. We see people running to gold today. The gold high was 35.09. Today we're at 3,461, up $60 a troy ounce. It's a big move.
Yeah. So, gold was looking expensive, but it was looking expensive because there was a demand for it. And we can clearly see now there's not a lot of other substitutes for a safe haven, a store of value. Bitcoin is kind of waffling a little bit today, but I think it is a store of value, but there's a lot of different investors in Bitcoin than gold, and we're seeing because it's a 24/7 asset, people are using it for liquidity. So we're seeing some of the pullback from liquidity because they're linked to leveraged assets, but it's still a store of value. So we're going to see this continued demand for safe havens like gold and Bitcoin because they're a great diversifier for a traditional equity bond portfolio.
So when you talk about the new normal and some of the things that we have to deal with, you mentioned gold and tariffs, and we have geopolitical now events happening with Israel and Iran. You also have some of these other the market vector, global nuclear innovators, Bitcoin, Ethereum, strategic metals. Tell me about some of these, and global clean tech. Are these some things that you think people should be looking at or investing in?
Yeah, so I think, if investors are trying to understand where can they invest, I think, that is going to be less sensitive to global risk. Think about the policy shifts that are structurally happening, and we're seeing this refocus on uranium, nuclear energy, because we recognize that AI is a real story. It's going to require data. It's going to require processing. So it's going to use up a lot of energy. So we're seeing a lot of policy directed towards making that easier to accomplish, as well as this escalating geopolitical tensions are driving countries to think about their military and their security resilience. So we're seeing defense stocks also on the rise around the world.
So as people try to diversify here, I mean, this move that we're seeing in oil is the biggest in years. When you're seeing oil moving, 8-9% in one day, that's a big deal. Were you feeling like, with your team when you're doing the research, did you feel like the market really was somewhat steady and had a higher year-end target and all that? And are you still in that phase? I mean, for example, Citi had a 6,300 target at the end of the year for the S&P. Were you feeling like we could continue to climb the wall of worry and be higher at the end of the year? And can we still do that?
I mean, I think this is not an environment to really focus on risk-on strategies, because as we've seen, these shocks can happen overnight. So I think it's still prudent for investors to think about diversification. If they're looking for growth plays, then you have to be a little bit more targeted. And oil is a good example where, given the rise in oil price today, you're seeing a very differentiated performance in aerospace and defense stocks because, the commercial aerospace companies are going to be more impacted by the higher oil price.
I do want to get to the U.S. dollar, but I am thinking about the nuclear stocks, which really have come into favor for power, right? For alternative waves to power. We've seen data centers needing power. We're back to the not thinking nuclear was such a bad word. If you remember, over 20 years, we didn't even want to talk about it. And, we've had now issues with Iran. But at the same time, I mean, there are ETFs. Is the group something worth investing in?
So year to date, I think these companies collectively are up 80% almost, because there's regulation focus now, there's policy focus, and there's this sentiment shift around investors recognizing that, it is a necessary clean energy, cheap alternative in order to power AI, power quantum technology, to really process all this data we need. So, there's plenty of nuclear, uranium, stocks out there.
They've been exciting to watch, without a doubt. How do we feel about the U.S. dollar? I saw it in the 98 range yesterday, had been at around the 99 range. Are we okay with that?
Well, again, I think there's been this kind of movement away from U.S. exceptionalism, and people are talking about dollar de-dollarization, but again, there is not really a lot of alternatives to the dollar, right? So, as we saw today, when there's a real shock, people still come back to the dollar. But there is a recognition around foreign players that they need to have less dependence on the dollar, and that's moving slowly. Gold is now becoming the second most held reserve with central banks. We're looking at other countries focusing on crypto assets. So, we're looking for alternatives, but it's not there yet.
Right. In the big picture here, when you look at the other sectors, tech has been exciting, has done incredibly well. This, rebound from the doldrums of the 4,800 level on the S&P 500 has brought up many names are even at highs. Some are not. But tech has been an exciting trade. What are you hearing about tech still being something to invest in?
I think tech, disruptive tech, there's always going to be innovations there, but investors have to really be clear about being over-concentrated, whether it's one region or one enabler aspect of it. Be diversified. If you're trying to target tech for AI, think about not just the hardware, but the software or the data processing that's required to kind of enable all of this innovation. So I think it's still the same story, be diversified and think beyond just U.S. companies.
Yeah, I mean, I'm sure people ask me about the Mag 7 all the time. Do you have any thoughts on that group?
Well, I think, these are big behemoths, right? They have a monopoly and they have scale, but I think the innovation is going to come from the smaller players.
Right. And a final thought here, as look, now we have uncertainty. Next week we have a holiday. Thursday will be Juneteenth. The market will be closed but back open again on Friday. anything else, because the 10-year Treasury is at 439 today, folks. So obviously bonds, they've been buying some bonds, right?
I think if you've structured your portfolio for resilience, you should just stop looking at the news and really
Stop looking at the news. Yeah, we have the Fed meeting coming up. I wonder what Jay Powell may say one way or another. I mean, people are really waiting on a rate cut or two.
Yeah, so I don't think the rate cut's going to happen next week, but don't be so glued to information that's not going to change or not going to have a real impact.
Joy Yang, Market Vector Indexes. Always love having you on. Thank you, Joy, for being here today.